Thank you, Isha. Good morning and good afternoon, participants, for joining this very interesting session, along with my two esteemed and distinguished panelists. So welcome again, Mr. Tangonan and Mr. Jayalath, for joining for this session.
Good morning, and thank you. We're pleased to be here.
Yeah, good morning, gentlemen, Amit and Assistant Governor Jayalath.
Like everyone, even I'm excited to hear the perspective and the insights from both these two distinguished panelist members. So let me kick off the session with a bit of a context setting. As we all know, financial inclusion is a bedrock for any economy to have an inclusive and a sustainable development. The quality and extent of financial inclusion is determined by various parameters, and some of them include how infrastructure, both physical and digital, is helping the unserved and underserved population in accessing the financial services products, and not only in access, how these products are serving their daily needs at an affordable cost. Through a series of steps taken by the government and the policymakers over the last so many years, we have seen significant development and momentum in building an inclusive society. One of the driving factors in this direction is how regulatory developments have shaped the or boost the future of digital payments ecosystem, and more so in the cash-driven economies. It's often acknowledged that both demand side as well as the supply side factors have to be addressed to build a cashless society. Now, keeping these points in mind, let me now turn to my panelist members and cover themes around collaborations, innovations, digital infrastructures, and if time permits, I would also want to touch upon CBDC. So let me invite Mr. Tangan, you first to the discussion and check your perspective around, as we all know, both in global and Asian markets, digital infrastructure plays a lot more important role in building or driving digital payments ecosystem. How do you see that being an approach in Philippines market in particular, and the regulators' agenda to push building a lot more scalable and universal digital payments infrastructure? So your thoughts around that?
Thank you, Amit, and good morning to also to your audience. So in the case of the Central Bank of the Philippines, or the Bangko Sentral ng Pilipinas, what we are doing now is to communicate a course that BSP has charted towards achieving greater adoption of digital payments by the public. We believe it is important to do so as a regulator and policymaker in order to have all digital payments ecosystem actors align with the vision and with the course that the country is taking. So towards this end, we have the Digital Payments Transformation Roadmap 2020 to 2023. Just briefly, the objective is to achieve a digital payments share of total retail payments transaction volume of 50% by 2023. And by about that same year, we also envision that 70% of our adult population would own at least one transaction account. So this roadmap has three main pillars. One is the digital payment stream. So through this, we would like to provide the priority digital payment services to cater to various or the most widely used, commonly used uses for digital payments. Like in the case of the Philippines, we recently have launched the QRPH payments to merchants, so that we have an interoperable framework for customers paying the merchants by just scanning QR code of the merchants, because you see, 70% of our retail payments transaction volume is merchant payments, and only about less than a quarter of that is already in digital form. So we believe that is a very fertile ground for even bringing digital payments to more people. The next pillar is we have the digital payments infrastructure. So we have recently, under this pillar, we have launched recently, last July, what we call the FieldPass Plus. It's a real-time gross settlement system that conforms to or that uses the ISO 20022 messaging format, and we did this to not only cater to more financial transactions with growing sophistication in the Philippines, but also setting the stage for interoperable cross-border payments with other jurisdictions. And the last is pillar is we have the digital payments governance and standards, where we recently issued regulations on digital banking framework, open finance framework, and adoption of principles of financial market infrastructure, and where we also laid down the standard for a QR code that should be used for all financial transactions in the Philippines. So we call that the QRPH. So this is just a very brief description, Amit, of how we see the central bank's role as the regulator and policymaker in kind of like shepherding the industry towards making available the demand-driven digital payment services for the benefit of the public. Thank you, Amit.
Thank you. Very encouraging I would say move and initiatives being driven by the central bank, like you spoke about payments transformation roadmap under these three pillars. So yeah, I'm sure like this is going to help develop many products around these initiatives which you are planning to take it to the Philippines market. Thank you so much. Mr. Jayalath, how do you see that shaping up in the island nation in terms of the setup of some of these common universal infrastructures and the maturity that they have already reached so far?
Thank you, Amit, for the question. I think as you may be already aware that Sri Lanka is a country with high banking penetration, and at the same time Sri Lanka has the number of accounts for the adults close to 90%. So 85 to 90, it varies between 85 to 96% within the provinces. So in this background, we still see number of transactions in each of those accounts are not very big, particularly for the smaller group, smaller people. And what we have seen is that digital payments would add value in this area, particularly those who are in the field, like farmers who want to buy things. They don't need to come to town or city, so they can make use of the digital means to get whatever their implements or other consumables into the field itself. So in this background, what we have seen is that the country has moved into introduce the payment platform. First is the gross value payment system, that is RTGS. It's happened in 2002. And then the common electronic payment system was introduced for retail payments. Together with that, we have moved into the QR standard. So we have introduced QR standard, Lanka QR, for the benefit of the developers as well as the public. So there won't be any multiple standards available. So central bank sees that we have a role for enabling, in creating enabling environment for this, as well as we are mindful of the risks attached to it. And of course, we are mindful of, particularly when the big platforms grow, there will be a very big chance for them to monopolize or create captive environment. We don't need that to happen, and we want competition to bring in. At the same time, we are mindful of the existing costs, and which is seen as obstacle. And we think that digital payments and digital infrastructure could bring down these costs. That has not happened yet, but still we think that going forward with the changes that we are introducing into the system, that we will be able to bring down these costs. Of course, this has happened to some extent already, and we see significant initiatives to cost reduction by the industry itself, as well as some work on the directives from the central bank. So we see we are focusing on something like 40 to 50% again in the digital payments environment. So by the year 2025, right? So I think in this environment, central bank has already created that environment. We need number of private sector people, who are particularly those are not in the formal financial sector, to join and bring their knowledge and experience into this and create that the level of competition that we expect the industry would bring in. So 4 miles to trek, but still I think we'll be very optimistic that we'll be able to go there.
Sure. Thank you. Thank you. No, very, very promising sort of agendas and the sort of policy goals that I'm hearing from both Mr. Tangonan and Mr. Jayalath towards helping to promote or create digital payments ecosystem in the respective geographies. So that's very encouraging, sort of, I would say. But just to kind of add from India perspective for the benefit of the participants, so India is also seeing a significant developments around building some of these common universal infrastructures and protocols like Unified Payment Interface (UPI), which is meant for faster and real-time payments between bank accounts. We have India Stack to have presences, cashless and paperless approach to start building up these FS products, financial service products. We have eKYC. In fact, India has gone and developing, seeing the success stories of UPI. We are developing similar other platforms to enable and make much more lending products as seamless as possible, so that the underserved population can get an access to these credit products. In fact, we are also seeing steps towards operationalizing open banking architecture through a concept called account aggregator in India, where consumers can sort of manage or use their data to fulfill their financial services needs. So a lot of developments are even happening in India, just for the benefit of the participants. Let me now turn to the next question, and maybe Mr. Jayalath, let me start with you as a first. So you spoke about a lot of these policy agendas and the initiatives which are being driven by the central bank, including the Lanka QR that you spoke about. But when it comes to the adoption, and I'll sort of split my question into 2 parts. One, the adoption by the set of target customers, be it merchants or consumers, who have the digital tech savvy, or who are digital tech savvy, and they are much better to kind of adapt or adopt these products. But there are a good set of population who are still not tech savvy, or who are not internet penetrated in some part of the country. How do you see the adoption between these two set of people when it comes to digital payments?
I think, Amit, you are quite right when you say that with the digital savvy people, adoption would be very high. In Sri Lanka, it's also same. So digital savvy people, I think, get used to this very early and adapted to the new environment. But there is very large group of people who are not that digital savvy. Particularly, you may be aware that Sri Lanka has an aging society, and we have a very big hurdle to clear that educated this particular group. So what we have done is we have initiated a number of new actions in this regard, particularly with the involvement of the financial community. And latest one is the QR. We saw that though this was introduced in 2020 and adoption was somewhat slow, but people realize its importance after the outbreak of COVID-19. And we see that there's a greater interest under lockdown scenario for people to come in. Before COVID, we started our education and awareness program, and we make use of the advertising media, main advertising as well as social media. And one initiative was called Cash Wade in Sinhala language. It's called problem of using cash. And so this initiative has taken to the masses a significant way, and we have used prime times in communicating this, and people little by little got to aware of the initiatives and started to query this particular mode of transaction from the banking. So then we started together with that, we had seen a problem of even the bank managers and officials in the front desk are unaware of how to use these digital means. They, particularly those who are serving in the remote areas. And we have initiated another program to educate them. So banks, every time we have started to conducting particular sessions, meetings and real-time hands-on activities to educate them on this. So with that, there won't be a issue of customer coming into bank and asking the branch officer, but officer saying that he doesn't know or that he may give a wrong answer. In our culture, that people don't like to say no or don't know, but still what they say is they most probably give a wrong answer. And so that we didn't want the first experience of the customer to make go that bad. So therefore, we try to start education. Unfortunately, COVID pandemic has created significant impact on this. We couldn't have physical contact, but we still use social media to go to those target groups, including the public. And at the same time, we had the hands-on sessions in the public places like the region markets places, and particularly to bring in the vendors and to bring customers. So that in those initiatives, though started by the central bank and not always by the central bank itself, it was by the institutions, financial institutions themselves. And little by little, I think the awareness creation has taken place and masses active. But as you rightly mentioned, it is a significant challenge to bring this less aware segment of the population into the digital means. There's a reluctance in some parties, and some parties have the fear of security, fear of getting the governments and others to know their cash position or financial position, things like those. So it's a huge challenge. I think going forward with the assistance of financial community and the fintechs particularly, so we'll be able to educate these groups and bring them into the digital world.
Sure, thanks. Thank you so much. Participants, if you have any questions, feel free to drop in the chat box. I will be sort of raising these questions to the panelist member during the course of the session. Mr. Jayalath, you just spoke about these challenges, so let me now turn to some of these sort of points, and maybe Mr. Tangonan, let me invite you to the discussion. Despite a lot of these opportunities, building an inclusive payments ecosystem comes with its own set of challenges, be it from data privacy, money laundering, data theft, identity theft, frauds, and many others, right? How do you balance these opportunities, innovations, along with these threats when shaping the policies, so as to ensure that the trust and confidence of the citizens remain intact. So what goes behind in developing these the policies so that like both things go hand in hand?
Yeah, thanks, Amit. So about 2 years ago, the BSP started working with the financial industry in order to launch digital literacy and cybersecurity awareness among the transacting public. It is a central bank and industry collaboration in order to bring these messages to the users. And of course, there were measures undertaken by the central bank in order to raise the standard, the cyber resiliency standards of the financial sector to align with those set by the US NIST and also the BIS on the cyber resiliency framework. So, and I'm happy to share with you that because of this demand side and supply side interventions, the growth of cyber fraud in the Philippines pales in comparison to the growth of digital payments usage. We had a I'd say amazing response from the public towards the course that the BSP charted towards expanding the use of digital payments for as far back as 2013, the Philippines only had a 1% share of digital payments over total retail payments transaction volume. This was a study undertaken by the Better Than Cash Alliance. And so in 2017, again, with the government's vision of using digital payments for financial inclusion and broader-based economic growth, the BSP issued a regulation on the National Retail Payment System Framework. And that, just briefly, that reformed the payments industry and made it more inclusive, made it interoperable. So after that, the customers of banks and electronic money issuers like MNOs could now transfer funds from one account to another account, even if they are not within the same financial service provider. So that reform has really enabled wider adoption of digital payments, such that when we did a similar assessment, a comparable assessment in 2021, because we were measuring 2020, we saw that the country has progressed from 1% share of digital payments to 20.1% in 2020, which incidentally slightly exceeded the target of BSP, which is 20% by the year 2020. So that, Amit, set the stage. With that encouraging success, it set the stage to continue the momentum and even take a further leap of achieving 50% by 2023, and this has to be done deliberately and purposively. And so, again, given the assessment, so we know the payments use cases that are contributing larger numbers to the total retail payments transaction volume. So that's what we are targeting, and for the governance, we are making sure that the national payment system remain efficient, remain safe and, of course, inclusive and definitely interoperable. So, yeah, I mean, everybody faces challenges, and one challenge we have is really to keep as the digital payments ecosystem grow, and as the industry introduce more digital payment services, and as the scale is growing, of course, we need to enable that. At the same time, also maintain, if not improve, on the efficiency of the national payments system.
Got it.
Thanks,
Thank
Amit.
you. Thank you so much. Thank you so much, Mr. Tangonan. In fact, we spoke about a lot of initiatives and sort of work that has already gone in building the local payment infrastructure and adoption towards that. Let me sort of switch the discussion to the regional context, and let me invite both Mr. Jayalath and Mr. Tangonan, both of you, for this question. How do you see these collaborations between sort of central banks in the Asian market in promoting financial inclusion in the digital sort of context? Like, how do you see those discussions or collaborations so that there is a lot more initiatives and products which can be developed on a cross-border basis? Maybe Mr. Jayalath, you want to go first?
Okay, thank you, Amit. Thank you. I think it's a very interesting question. I think it's a huge challenge right now. You know, I think almost all countries in the region have the RTGS, the large value payment systems, but most of them are not interoperable in terms of the cross-border payments. So all RTGS has multi-currency feature, but I doubt that many have this feature activated. And so my understanding is that Malaysia has this and kind of multi-currency feature activated at least for 1 or 2 currencies, and Singapore is and Hong Kong, particularly in South Asia. My knowledge is that we don't have that kind of feature activated for that. Cross-border payments, particular issue. Even QR, we have seen one request coming from one country, but it has not gone very far, and that again we see obstacles. So if we can activate, I think particularly important for bringing down the cost of transactions. We may need to use third parties. You may need to go to physical environments, and may no need to move into the other expensive modes of the back office type of activities. And this will be straight through processing if we can do that. And today the AI and other facilities are available, so you can make exchange rates, conversion rates are mostly instantaneous, and we can make use of them and bring them into our whatever digital modes that we are transacting. One issue I would see is the standardization. Though we have standardized within the country, may have not standardized across countries, and we are not following the same standard. I think the standard for these payments are yet to evolve. I would say particularly retail payment level. The standard kind of standard has evolved for large value payments, but still it is not interoperable or linking into each one's RTGSs. But retail payments, I think we are yet to develop cross-border or cross-country standards, which is acceptable to everyone. And once it is there, I think this would be these countries will be able to interact more smoothly at low cost. One initiative I've seen is that with Singapore's involvement with Bank of Canada, and because it's in CBDC, but still, if it can bring that kind of interoperability into the environment, whether it's CBTC or otherwise, that would be very beneficial to bring down the cost and bring the masses into the system, and everyone would see the benefit of digital payments and digital activities, and it would be easy for everyone to bring them in.
Sure. Thank you so much. Mr. Tangonan, your take on this collaborations between central banks?
Yes, Amit. You see, cross-border payments is a very important initiative for the Bangko Sentral ng Pilipinas. Recently, we entered into an enhanced cooperation agreement on financial technology with the Monetary Authority of Singapore in order to collaborate to have the market provide cross-border instant payment service between Philippines and Singapore. This is important to us because, coming out of the economic challenges during the pandemic, and to support an economy that's coming back toward to not only positive growth but a very good GDP growth as of the last quarter. There's really a need to expand trade to help our MSMEs through e-commerce. And that would expand the market, not only the domestic market, but the regional market as well. And, tourism is a very important sector in our economy that we would like to facilitate the tourists from the region, particularly ASEAN, who come here, to make it convenient for them to be able to buy goods and services locally. And of course, Amit, Philippines is the fourth largest recipient of inbound foreign remittances. So we have several hundred thousands of our compatriots working in Singapore, from skilled to semi-skilled roles, and they send their remittances back home. So we would like to make this faster and more affordable for them. So not only as a service to them, but also to encourage more remittances to be sent through the formal banking sector, instead of maybe cheaper but not very safe informal and alternative means. So in our discussions with the MAS, Amit, we are working together on a multilateral framework after the BIS Innovation Hubs, the work done by them on cross-border instant payment system. And this is also to build on what Singapore has established with the Bank of Thailand. They have the Pay Now and the Prompt Pay interconnected. So the individuals or businesses from either country can send I think up to about $1,000 to counterparties across their border. So we would like to offer our citizens similar service, and leveraging on a multilateral framework, Amit, so that later on it will be simple and faster for other countries to connect and offer also similar services to their constituents. Thanks.
Sure, thanks. Just adding from India, so even the Reserve Bank of India has also recently announced a collaboration between UPI and PayNow for a fast charging payment, and I'm sure there are going to be many such collaborations to come in the near future for cross-border payments. Thank you so much. We have just a minute to go. Well, I do have many questions to ask, but in the interest of time, I think we'll have to close this session. But let me sort of get a quick response from both Ms. Tangonan and Mr. Jayalath on how do you see CBDC playing up in your respective country? Do you see challenges, opportunities in bringing up this alternative digital currency? Mr. Jayalath, you want to go first?
Okay, I think CBDC would be a great opportunity for the countries to ensure that collaboration. Of course, digital, if you see the Central Bank of Sri Lanka's perspective, I must say that we don't want to replace the intermediation that happens now with the CBDC, but CBDC would complement the existing structure and make it easier for both policymakers and consumers in using it. And it really would facilitate the straight-through processing, and you only have digital wallet now. Digital wallet will be used from the beginning. The currency is issued digitally, and Central Bank of Sri Lanka has done its initial research on the issue of the CBDC. You may have heard that Governor Central Bank of Sri Lanka has already announced that the intention to go into CBDC. But we are yet to commence pilot run or any kind of structure. And I must say that we have already initiated the digital ID environment. And Sri Lanka is the first country in the region to go put NIC, National Identity Card structure in 1970. But still, digital NIC was not materialized until the last year. Last year, we were able to link it digitally, the whole financial institutions, to Department of Persons Registration. This was significantly lacking in particularly moving into the digital environment. And so in addition to that, we have introduced the eKYC based on blockchain platform. That is proof of concept already completed, and this we have assisted by private sector experience, but overseas as well as domestic. And they voluntarily came on board and assisted. We have about 30 odd proposals, and we have selected out of 30 odd proposals 3, and all 3 is linked with the number of financial institutions, banks. And they have tested it, and now the POC has completed. I think from there on that we will call the expressions for initializing that or activating that. And after that, we'll have a digital NIC full with less cost for many. And with that, this will be we think that we'll be able to make use of CBDC. And but though we have done the research a few years ago, we were waiting to see the experience of other countries in using CBDC. So now we have seen that few countries are already started pilot runs and at least testing it. So they are not very far that Central Bank also starting pilot run of CBDCs. So, sure.
Sure. Thank you. Thank you so much. I know we are already out of time, but Mr. Tangonan, just 30 seconds. My apologies for not giving you enough time, but how do you see CBDC shaping up in Philippines?
No problem, Amit. Well, we've done a research and consultations on CBDC, and we have identified certain use cases, mostly in the wholesale payments space, where CBDC could really help us achieve our objectives of a safe, reliable, and efficient payments in that space. So we are moving towards experimentation and organizing this and working with interested financial institutions in the Philippines in order to do a pilot on this. So that's where we are right now, Amit.
Sure. Thank you so much, Mr. Tangonan, Mr. Jayalath, for sharing your valuable inputs. Thank you so much. Isha, back to you.
Thank you so very much, Mr. Amit Jain. Such a pleasure having you here moderate this very, very special governance panel discussion. And a big thank you to our speakers, Ms. Jayalath, Mr. Tangonan. What a pleasure hearing what you and your teams have been doing both in Sri Lanka and in Philippines. I'm sure that this gives us more and more reason to engage